Welcome to the Registered Investment Advisor Podcast, where financial services marketing expert Seth Greene interviews experts, executives, and top producers to share can't-miss tips on how they successfully manage their financial service firms, grow their businesses, create great relationships, and influence the industry. And now, here's your host, Seth Greene.
Welcome to the podcast. This is your host, Seth Greene. Today, I've got the good fortune to be joined by Curtis Stowers of F5 Financial. Curt, thanks so much for joining us.
Happy to be here, Seth.
All right, let's go back in time a little bit. How'd you get started in the business?
Boy, that's an interesting question. I actually come at financial planning from a little bit non-traditional background. I spent close to 20 years working for Caterpillar, living and traveling around the world. I was a senior executive general manager at one point in time. I ran the Europe, Africa, Middle East parts operations. Always had an interest in finance, looking at P&Ls, started a Subway along the way. So owning my own business was something I was interested in. I ended up relocating up to Chicago into a different position with Cat. And right after I got up here, they decided they were going to sell the part of the company I worked for. I wasn't particularly enamored with being sold or going to work in the private equity space. So I did some reflection. I had a lot of people asking me about financial questions. I was doing a lot of planning on my own and decided I would go down the path of becoming a financial planner. Did some research, found out about the CFP program, went through the education, passed the exam. Things moved forward with the sale, transitioned out, went to work for a small firm for a year. And after a year, figured I was ready to launch on my own and launched the business back in February of 2014. So been just over 10 years doing my own thing.
Congratulations. And you've been with F5 the whole time?
Yep, it's my own RIA. I launched it there, started the RIA, and off and running.
Awesome. First, congratulations. And who is an ideal client for you?
There's two groups that the families we work with fall in. The first is the corporate executive, as far as somebody who's probably married between 40 and 50, a couple kids either going to college or already in college, about to get there. They do really well. They're busy, but they're not necessarily totally enamored with working in corporate America. They're looking to say, what do I have to do to get myself to the point where I can walk away from this and start something new? So that's one set of folks we work with. The other ones are business owners, as far as small business owners, folks that have companies that are maybe 1 million to 10 million top line, and they're looking for some general guidance about business and then also financial planning as well. So we deal with both those demographics, and both of those mirror my background. So it's not surprising. You often find, I think, advisors who serve families who are coming from similar backgrounds as themselves.
That makes a lot of sense. How are those folks finding you? How are you getting them in the door?
Yeah, great question. About a third of them come from the internet. As far as actually they find us online, do search. Got a technical background, so when I first started, I spent some time trying to figure out how to optimize that website, and then we've continued to work on that. About a third of them are from referrals, as far as people we work with, and then introductions from there. And then about a third of them come through networking, as far as some different organizations I'm involved with. So those three are about equal. We're trying to figure out how to formalize that a little bit more and figure out more formal marketing plans, because there hasn't been a real strong marketing push. It's been more organic, bumping into people, and the website's the one place where we've invested a little bit of dollars to make that work.
Well, that makes a lot of sense, and it's pretty par for the course. It's an RIA that's been around for about 10 years. Talk a little bit about your relationship with DFA.
Sure. When it came to investing, I wanted to do what was data-driven and fact-based. I've got a PhD in engineering. I like my facts and data, and all of the research I've done suggests you cannot beat the market. So that drives to an index-based approach. As you dig into it more, you find out that the factor-based approach of investing has a little bit more precision in capturing certain things that are persistent and pervasive over time. You've got the stocks outperforming bonds, small outperforming big, value outperforming growth, and profitable outperforming unprofitable from a business standpoint. But when I looked at it, I decided that we would use the factor-based approach. DFA are the pioneers there. I believe there's an awful lot of folks that do factor-based investing now. We've chosen to stay with them. We feel like they're a good, solid choice, and they do a few other things as far as to maybe get just a little bit more out of the portfolio. That's what we recommend. We always tell clients, we explain it to them and tell them that's how we have our personal money invested. But if somebody wants to do index-based investing, we have no problem with that whatsoever. Somebody comes to us and says, hey, we want you to pick the next hot stock and figure out how to do market timing. We say, appreciate the opportunity, but that's just not a good fit for what we do. So that's how we got to DFA. It's been a really good relationship.
How has that approach been perceived and received by the clients that you're managing?
Um, Up front, as far as when we walk through it with them, they like it. And the reason they like it is because we're here in Chicago. A fair number of our clients come from Chicago. DFA was formed by David Booth. You've got the Chicago Booth School of Business. So there's an immediate credibility factor in that. The data backs it up. That's been very well received just from the academic part of it. But also when you talk about, hey, Apple's $2 trillion, how big can it get? When you talk about a company that's trading at 1,000 times its earnings, or you talk about a company that's profitable versus unprofitable, and you say, these are the kinds of companies we would prefer to invest in, it passes the sniff test as well. So that is something that people like. As some of the factors haven't performed well over the last decade, large companies have done incredibly well over the past decade. So we always talk to folks about there's no guarantees on this, and we expect over the long term. I was having some conversations yesterday with somebody about large cap stocks, and there's somebody that's looking at working with us, and they were actually talking about how well it's done and wondering if the run has ended. And I'm like, I don't know if the run's ended. I just know what the factors say, and here's what we recommend. So that's how it's been received pretty positively.
What are some of the biggest challenges or mistakes that your clients are making that you're helping them fix?
A couple of them. One is, one is tax planning, just not taking advantage of all of the opportunities, whether it's maximizing your deferral in a 401k or taking advantage of an NQDC plan, or business owners getting set up with a 401k or solo 401k if they have no employees, or looking at cash balance plans. As we get with some clients that are dealing with a little closer to retirement, or in retirement, how do we stuff the tax brackets, realizing that when they get out to 73, they're going to have to take RMDs. So tax planning is one of the mistakes we see. Another place we see some mistakes is in investing. You look at somebody's portfolio and they've got 4 holdings, and it's an actively managed large cap fund, S&P 500 fund, and a factor-based DFA fund that's maybe the large cap. So it's like, they're like, these performed the best over the last 3 years, so I've selected them. We're like, we understand that, but let's talk about what you're actually invested in. Those are a couple of the big ones. The other one is just passivity, tendency to procrastinate, as far as they know they should get the estate plan updated. They know they should plan for college. They know they should be thinking about how much to save. So those are things where they know it, but because they're so busy, they don't make the time for it. So that's one of the mistakes they make, is they wait too long to get somebody to help them. So we try and take some of the burden off the plate for them.
That makes a lot of sense. Your passion is obvious. What do you like best about what you're doing?
I like working with the people in the non-financial aspects. The name of the firm is F5. It stands for faith, family, friends, fitness, and finance. We tell everyone that finances are just a tool that allow you to focus on the other 4 Fs. When a family comes to us, we talk to them up front about what we like to do and how we view the world. We let them know that we're going to be comfortable having discussions on those topics. We let them know that they're the quarterback, though, as far as they're the CEO. If they don't want to talk about their faith, or they don't want to talk about fitness, that's absolutely fine. But don't be surprised if you see correspondences from us on the blog, or you hear from us on that, or we at least ask a question about it. Very much enjoy helping families in those other areas. We go through a very systematic approach, which is focused on first the goals and where they want to go in those different dimensions. It's very enjoyable to see a family realize that they have the resources to do what they want to, and whether those resources are the current earnings they have or the portfolio they've built, because you got people early in their career, they've got some cash flow, and that gives them the opportunity to do things. It's very rewarding to see a family say, well, I'm not sure if I can. I'm not sure if I can go on a trip. I'm not sure if I can retire. I'm not sure if I can buy a car. I'm not sure if I can do this. And to say, hey, here's what things look like. If you do this, we don't see any issues with it. And for them to say, so I can do this? And say, we think it's certainly within the scope of your plan. We would encourage you to do that. So that's a lot of fun to see people stop underliving their finances. A lot of the folks we have are pretty conservative, and sometimes we have to push them a little bit to spend a little bit more.
That makes a lot of sense. With everything going on, it seems like there's something changing, something new, something different in the industry all of the time. How do you stay on top of it all?
This is always one good place to go. I think everybody relies on Michael and his information. Ed Slott's another good place to go as far as I'm on Slott's list as far as I do a ton of reading, on leadership and management and so on and so forth. When we say on top of everything, there's the financial aspect and then there's the other 4 F's. And if you look at a family, you have financial capital and you have intellectual capital. So staying on top of things means staying on top of that intellectual capital development. What's going on in the space? How can we help people to use their brains better? These are people that are either, like I said, corporate executives or business owners, and how can we help them to be more effective in their jobs? I'm not reading a lot of articles on what's the next best investment strategy. I've got the strategy, it's developed. It's more, how am I going to help you in those other areas? And then when it comes to the financial aspect, a lot of taxes. We use Holistiplan. Holistiplan has some nice education seminars. And then the other thing is stay very active with other advisors. I've got one advisor who he and I talk a couple times a week. We've grown up together in the business. He's got his firm. I've got my firm. We share just about everything idea-wise, any new ideas we come up with. And then DFA has been really good as far as there's a greenhouse group. So there's, I think, 8 of us in there, and we meet every quarter and go through what we're seeing. So trying to leverage advisors, Kitsis, the slot report, and then just a lot of reading. And then I guess the final thing is I'm involved in a mastermind group. So I've got folks around me constantly as far as that are teaching me new things.
That is awesome. Talk a little bit about, you mentioned other advisors. Is there a team at F5?
There is a team at F5. As far as I initially started the business, and my vision was to serve maybe 20 or 30 families. And that was where I started. And I thought, this will be fun. It's a small business. It's not how I'm wired. I'm wired to build things, to grow things. So decided to build it bigger. One of my colleagues who worked with me at Caterpillar had actually gone separately. I didn't know it. And he got in the financial services space, Josh Duncan. And Josh decided he wanted to come together with me. And so Josh and I are partners. I've actually sold him 30% of the business. So I've got Josh as a partner in the business. And then we've got a full-time administrative assistant. She's much more than that. She handles all of the operations types things. So you can say more ops support. She runs our calendars and everything. So Jen takes care of that. We've got a paraplanner that works with us. So Nick takes care of that. Got an intern. And then I have some accounting and finance support as far as I've actually got an offshore resource that I work with that's a top-notch resource for those things. Time at Caterpillar, business process outsourcing and leveraging expertise offshore is something I liked. So we've got him, and then we're bringing another offshore resource on. So we're growing, and if things go the way we expect them to, we would expect to continue to add people, more advisors, more ops support, more planning.
Awesome. For our folks who are watching and listening and want to learn more, where is the best place for us to send them to learn more about all things Curt and F5?
The web is always a good place to go for anything. You can do a search for F5 Financial Planning, or if you want to go F5, which is the name, and then FP for financial planning, www.f5fp.com. That'll take you to our website, and you can see all about us. I think we have over 350 blog posts out there, and wow. We do 2 emails a week as far as, and each of those emails normally has a blog post or something. I'd say 90% of that content is ours, self-developed. 10% we might repurpose something. We even provide a little bit of commentary on that. So we're very active. There's a lot of information out there, a lot of information related to non-financial topics, book summaries, just different things out there.
All right. We greatly appreciate your time. We know it's incredibly valuable. This has been Seth Greene with Curtis Stowers from F5FP, F5financialplanners.com. Thanks so much, Curt.
My pleasure, sir. Happy to do it. If there's anything I can do to help you or to help the listeners, feel free to reach out.
All right. Thanks so much. Thanks, everyone, for watching or listening. We'll talk to you or see you next time.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.